Hello everyone, this is Tejashwani. In today's video, let's try to understand about the test your knowledge questions of the PGBP chapter. So now we will be dealing with selected questions of test your knowledge, and the test your knowledge timestamps will be provided in the description and as well as in the comment section also. You can just, if you want a respective question reference, you can go check in the timestamps. Okay, let's start with the question number 7, that is test your knowledge question number 7. This fellow, Mr. Shivam, a retail trader of Kochi, gives the following information. What have they provided, people? What have they provided? They have provided the trading and profit and loss account is what they have provided. Now, opening stock information is given, purchase information, gross profit information, sales closing stock. Okay. Salary, rents, interest on loan, depreciation. These informations are given. We'll come back to this point later. Gross profit information is given and income from UTI is given. So now let's get into the additional information question. It was found that some stocks were omitted to be included in both the opening and the closing stock, and the values were opening stock 9,000 and the closing stock 18,000. People, if you observe something over here, opening stock and closing stock information is already given in the question. Correct? So now let's take a simple example here. Let's take a simple example wherein the opening stock, suppose, let's consider sales being 10, closing stock being 5, total is going to be 15, and your opening stock being 4, your purchase being 8. So now tell me, people, how much is your profit going to be? Profit is going to be 3, right? Everyone, your profit is going to be 3. So 15 and 15, the total has been matched. This is what the normal situation is. Correct? So now, if you consider the same thing, if you just consider everything to be constant, else other than closing stock, that is, suppose if the closing stock is understated, that is, instead of actual figure is 5, but instead of 5, if it is 4, what would happen to the profit, people? If the closing stock is decreasing, automatically your profit will also decrease. No? So automatically this is profit, automatically your profit will also decrease. So can I say if your closing stock decreases, your profit also decreases? What if your closing stock, whatever you are recording, if your closing stock increases, automatically your profit also increases. Do the math, everyone, do the math. You'll get 6. So what does it represent? It represents if your closing stock, sorry, this is going to be 4. It means if your closing stock increases, your profit also increases. Correct? Now, keeping the closing stock as constant. Now, let's change the figure of opening stock. Why are we doing all these things? In order to understand the first adjustment given in question number 7, that is Mr. Shivam question. Okay. Now, if the opening stock decreases, if the opening stock decreases, tell me what will happen to profit? Profit will increase. That is, if your opening stock decreases, profit increases. The opposite reaction is the same. That is, opening stock increases, profit decreases. Correct. This is the effect which we already know in our accounts. Try to understand the same thing what has happened or what is given in the question. Here, in the question, it is stated it was found that some stocks were omitted to be included. If it is omitted to be included, means your valuation of closing stock and opening stock, is it undervalued or overvalued? Obvious, it is undervalued. No? So, if your opening stock decreases, what would have happened to the profit? Everyone, if your opening stock is decreasing, suppose, correct? Everyone, if your opening stock is decreasing, what you would have the effect of profit? Profit would be increasing, correct? See, think if your opening stock was valued correctly instead of omitted, that is, if it is instead of undervalued, if it was properly valued, what would have been the effect of profit, people? The profit would have been affected, that is, profit would have been increased, correct? That is, your opening stock decreases, profit would have automatically increased. So now in order to rectify the effect, I can't go back, open the P&L account, make the rectification, the trading account, make the rectification. I'll just directly put it in my PGBP as my profit increase. I'm just looking into the effect of my profit, no? Because all of us know in your PGBP computation, the starting point is always going to be majority of the question. Your starting point is always going to be net profit. And if that is the case, net profit means you have to add back. No? That is what you're looking into this question. Clear? Now, what would the effect that you would do in the opening stock? If the opening stock decreases, your profit would increase. So you would add this in your PGBP computation. If the closing stock is decreasing, profit would automatically decrease. So you will subtract this from your PGBP. Everyone understood the effect? Great. See, salary includes 10,000 paid to his brother, which is unreasonable to the extent of 2,000. All of us know, as per section 48 to the extent a payment made to the related party, to the extent it is unreasonable, that is excess of fair market value, we are going to disallow it. Everyone making sense? We are going to do what? We are going to disallow it. If that is the case, if the disallowance is the case, how much you are going to disallow? To the extent it is unreasonable, no? So you are going to disallow. Expenses disallow means always remember, always remember, always remember. Disallowed of expenses, you would always add it back to your PGP. You would always add it to your PGP. So what you would do with this 2000, you will add. The whole amount of printing and stationery was paid in cash by a one-time settlement. By the way of one-time settlement to this fellow, Mr. Ramesh. So it is paid in cash. The cash over in this question is the cash to one-time payment to this one fellow, Mr. Ramesh. Let's see how much is the printing and stationery expenses given in the question. 23,200. As per section 48(3), excess of that is payment expense, that is payment of the expenditure made in excess of 10,000 rupees, other than account paycheck, account pay draft, or any other electronic clearance mode. In short, in cash. Keeping it very simple, in cash, if you are making any payment excess of 10,000 rupees, it is going to be fully disallowed. Not only just excess of the amount being disallowed, remember it is going to be fully disallowed. Clear? So how much is it going to be disallowed? 23,200. I told you, if you're going to disallow, what you're going to do? You're always going to add those expenses in your PGPP. Clear? Right. The depreciation provided in the profit and loss account is 1,05,000 and was based on the following information. The depreciation provided in P&L account is how much? 1,05,000 based on the following information. Okay, P&L account, whatever P&L account depreciation they have provided, what are we going to do? We are going to disallow that depreciation and we are going to allow the depreciation as per the Income Tax Act 1961. So what are we going to do, my dear people? We are going to add back this 1,05,000 rupees. We are going to add back 1,05,000. The opening balance of plant and machinery, that is written down value minus the depreciation. That is opening balance they have given after subtracting the depreciation. We need not do any further calculation of subtracting depreciation of the last year. That is preceding previous year. Depreciation we need not subtract and all. They have given, they have done everything and they have given the final amount 4,20,000. A new plant falling under the same block of depreciation was bought on 1/7/2023 for 70,000. Two old plants were sold on 1/10/2023 for 50,000. A new plant falling under the same block of depreciation was bought on 1/7/2023. What does it mean, people? It means you have purchased an asset which has been used for a period excess of that is more than 180 days. If that is the case, you are going to allow 100% of the allowable depreciation. In case of this plant and machinery, normal depreciation rate is 15%. Clear? For if you need the notes of whatever you are seeing over here, this is available in the Telegram channel. You can join the Telegram channel. It is the description is available. The link is available in the descriptions. You can go and watch it over there. Get the free resources over there. Okay. A new plant falling under the same block of depreciation was bought on 1/7/2023 for 70,000. Two old plants were sold on 1/10/2023 for 50,000. Two old plants were sold for 1/10 to 2023 for 50,000. We are going to subtract this. in the total block, and then we are going to calculate the depreciation. We will see that depreciation calculation now. See here, first of all, they have told opening balance of the plant and machinery is given in the question. How much is it, people? 4,20,000. Plus new machinery has been added. See, always remember, in case of depreciation of machinery, in case of machinery, when you're recording the WDV value, you're always going to subtract the totals with the totals, because your individual asset loses its criteria, loses its identity when it comes to block in your Income Tax Act 1961. It is unlike your books of accounts. Whatever the asset you record over there, those have individual asset criteria. But under Income Tax Act, you don't have such criteria for that matter. So total, how much is it going to be? 4,90,000. Minus the sale proceeds of the asset sold. Like whatever the asset being sold, you are going to record the same thing. 50,000 rupees you are going to subtract. And whatever the excess money, excess amount which is remaining, that is 4,40,000. On that, you are going to charge depreciation of 15%. You might say, Arey ma'am, cost of machinery, there is another cost of, that is new machinery has been purchased. You're just taking in total. People, new machinery has been purchased for a period more than 180 days. No? So if that is the case, you're going to provide full 15% depreciation. For the opening balance minus whatever you're recording over here, after doing the entire math, you're going to get the entire asset which is subject to 15% full rate of depreciation. So I'm going to consider directly 66,000. Clear? Now. So what you're going to do here, 66,000 you're going to subtract. That's the actual expenses allowed. Now, rents and rates include GST liability of 3,400 paid on 7/4/2024. People, how much is the rents and rates given in the question? The rents and rates is 36,000. Out of this 36,000, they have included 3,400. Understand one thing. As per section 43B, you guys remember section 43B? Section 43B states, if you make actual payment of your tax, duty or cess, whatever is liable to be paid to the government, if you actually make the payment on or before the due date of return filing under section 139(1), before filing the return, due date of return filing, if you make any payment which is corresponding to that previous year, if you make that payment in that assessment year, basically, you are going to get full expenses as deduction. Actual amount paid will be allowed as deduction. And even though this 3,400 is not paid before 31st March 2024, being the previous year considered, here it is going to be 7/4/2024. No, it means it is some 7 days after the financial year. But is it not before the due date of the section 139 subsection 1? Absolutely, yes. Absolutely, this is before 139. So this 3,400, is it allowed as expenses? Absolutely, yes. Allowed in income tax, sorry, allowed in P&L account, allowed in income tax. Is there any effect? No. Always remember, allowed as per P&L, not allowed, disallowed as per income tax, you will get the effect in PGBP. Not allowed as per P&L, but allowed as per income tax, you will get the effect in PGBP. Allowed over there, allowed over here, are automatically allowed there, allowed here, it's expenses which is already considered. So you're not going to give any effect. Not allowed over there, not allowed here also, you're not going to give any effect. The effect comes in your PGBP, always remember. It is going to be allowed there, not allowed here, not allowed there, allowed here. That's the only situation. Okay. Other general expenses include 12,000 paid as a donation to a public charitable trust. Other general expenses includes 2,000 paid as a donation to public charitable trust. All of us remember this public charitable trust goes with the deduction chapter, and it is available as deduction under section 18G. Criteria and categories are there. That is different. But it is going to be paid as a donation to the public charitable trust. That is 2,000 rupees of the charitable expense. The general expenses include 2,000 paid as donation to the public charitable trust. Clear? Now, tell me what you will do, people. You will subtract this under PGBP, and you will give, this is the expenses. No, you will add back, disallow this under your PGBP, and you're going to allow it under 80G as the deduction. Both are available. You are required to compute the PGBP of Mr. Shivam under presumptive taxation of 4480. What is 4480, people? Presumptive taxation, wherein you are going to pay the tax at the rate of 6%. for the turnover that has happened through the banking channels. And if the turnover is other than the banking channels, then it is going to be 8%. These are the minimum criteria. Can you show more? Absolutely yes. Can you show less? Yes. But after getting your books of accounts audited. The PGBP as per the regular scheme, they are insisting you to do both. Under section 44 AD also, under the regular provision section as well. And he has excised the option of shifting out of default tax regime. Okay, under the normal provision, assume that the whole amount of the turnover received by an account paycheck is during the previous year. So the entire turnover is provided during the previous year to the account paycheck only. So he will be subject to tax at the rate of 6% under section 44(8). So let's look into the adjustment question part. See, salary allowed, opening stock considered, purchases allowed, sales considered, closing stock considered in the adjustment. Salary allowed, rents and taxes, we have seen the adjustment. Interest on loan, they have not provided any information, so we are silent, consuming it for the business. Depreciation, we are going to add back, we've already seen. Printing and stationery, looked into the adjustment. Postage and telegram allowed. Loss on sale of shares, remember, sale of shares loss if you're getting, that will be allowed as loss under your short capital loss under your capital gain head. It is not allowed, it is not considered as income or either as expenses in a PGBP. So what you're going to do, you're going to disallow under your PGBP and you're going to record it as loss under your capital, that is as short-term capital loss. To the general expenses considered, net profit taken, gross profit, income from UTI. Again, this is the income which you are going to consider as income from other sources, not under this head. This income is taxable, but not under the head of PGBP, but under the head of income from other sources. So what you will do, this is income increase. Correct. As this is increase, your profit is also increase. I have to remove this effect. So I have to decrease. If this decreases, profit also decreases. If profit decreases, what you will do? You will subtract this from your PGBP computation. Clear? You will add this, you will subtract this. These are the effects you will get. Now let's look into the question. See, net profit as per P&L account, they have given, already given in the question, people. They have already given in the question how much? 50,000. So 50,000 is the computations which is already given in the question. It's already given in the question. Yeah. Next. Undervaluation of the closing stock. We have seen the effect, people. Just a minute, just a minute. Everyone, there's a small correction which need to be done in this particular adjustment. See, if it is omitted, if the opening stock is omitted, it means the opening stock is not decreased. They have not given the effect of increase. Omitted means they forgot to record. Your opening stock shouldn't have decreased. Your opening stock should have increased. If your opening stock is increased, what would have the effect it would have given in your profit? Your profit would have decreased. And this, while doing so many questions, those sort of small things might happen. So please forgive me. If opening stock increases, what happens to the profit? Profit decreases. If opening stock increases, the profit decreases. So it is going to be your opening stock is increasing. It means your profit is decreasing. You have to decrease your opening. Now, if your closing stock is increasing, if your closing stock is increasing, what will happen to the profit? Profit will also increase. So what is the effect to people? If the closing stock increases, your profit also increases. So what will happen to your closing stock? Decreases. It's a small rectification that we need to do. If opening stock increases, profit decreases. If the closing stock increases, profit also increases. So we are going to give this effect. So what we have done, we have given the valuation, that is closing stock we have added, and opening stock we have subtracted as per the computation understanding. Now salary includes 10,000 paid to his brother, which is unreasonable to the extent of 2,000. Again, it is added. Cash disallowance and printing and stationery expenses we have recorded over here. It is going to be added. And 1,05,000 rupees depreciation is going to be added. Short-term capital loss on shares, whatever we have considered, we have added over here. And this also we have considered. And donation for that matter is again going to be added in your PGBP. We have considered the same in our calculation as well. And closing stock or opening stock has been decreased. And income from the UTI, again, we have seen chargeable to tax under the different head. We are subtracting from the PGBP and we are subtracting here also from the PGBP. And depreciation, we have seen the working note, 66,000 being the working note, being the information. And the total, if you do the addition of these two and subtract this total, you will get 1,30,900. This is as per the, this is your PGBP income. Everyone, this is your PGBP income. And when you're computing the business, computation of business income, which is as per section 4480, would result in, that is, you have done as per the normal provisions. If you are considering as per 4480, the turnover is already given in the question, people. Is the turnover given in the question? Total turnover given in the question of 1 lakh, 1 crore, 12 lakh, 11,500 is the turnover which is already given in the question. We are going to take that turnover multiplied by 6% because account pay check only all the transaction has happened, which means it is through the banking mode. So 6% would result in 6,72,690. They've not given asked for a suggestion. They've just asked you to record as per section 4480, and this we have done with the question number 7. Now let's do the next question. That is, let's do question number 9. It's similar to that of your question number 7. So then let's move forward to the next question. Mr. Raju, a manufacturer at Chennai, gives the following trading and profit and loss account information. They've given opening stock, sales, closing stock, purchase, manufacturing expense, gross profit. Okay. They've given administrative expenses, CGST, penalty, GST paid, general expenses, interest to bank, depreciation and dividend, and this information has been given. First, let's get into the adjustment part first and then let's go back to the table again. Okay. So now following are the further information. Great. Administrative charges include 46,000 paid as commission to the brother. The commission amount at the market price is 36,000. So now what would be the difference between the amount, that is 36,000 and 46,000, that is 10,000 rupees. The administrative charges of 46,000, that administrative charges of 3,26,000 includes 46,000, wherein that amount of 46,000 is given to a brother. The market rate, the fair market rate is only 36,000. So excess of fair market value, that is 10,000 rupees, will be disallowed under section 48. Everyone, 10,000 will be disallowed. Next. Assessee paid 33,000 in cash to the transport carrier on 29/12/2023. The amount is included in manufacturing expenses. The TDS are not applicable. Fine. See, when it comes to the normal provisions of section 40A3, if you're making the payment in cash excess of 10,000 rupees, suppose in cash, other than account pay check, account pay draft, keeping in when very short in cash, excess of 10,000 it is disallowed, but this 10,000 limit has been increased to 35,000 if you are making a payment to a goods transportation agency, and in this case the transportation carrier, the amount which is paid is 35,000, not 30,000. So what you are going to do is that you are going to consider 33,000 as your amount that you are going to add back. Sorry, this 33,000 will be allowed because it is below 35,000. No, so this entire 33,000 will be allowed as deduction, allowed as per P&L, allowed as an income tax. Will you give any further effect? No, you will not give any further effect. Next. A sum of 4,000 rupees per month was paid as salary to a staff throughout the year, and this has not been recorded in the books of accounts. So if it is not paid, see here, this 4,000 rupees salary not paid can be recorded in 2 weeks. One, omitted to be recorded, that is forgot to record. Now, if you forgot or omitted to record these expenses and it is allowed, you are going to subtract 4,000 multiplied by 12 months, that is 48,000 you are going to subtract in PGBP. This is the one effect. The second effect is that you will consider, as it has not been recorded, as it is your unexplained expenditure, you are going to consider this 48,000 as undisclosed sources of income, and you are going to add back this 48,000 in your PGBP. To adjustment, any adjustment, both adjustments are accepted as per ICI. You can answer any point. You can assume any point over here. So we have assumed that this 48,000 as per the ICI only, not that is this 48,000 as to be considered as undisclosed sources of income. So we have not considered the Clear? Understood? Great. This 48,000 will be considered as your undisclosed sources of income and it will be taxed separately. Now, bank interest, bank term loan interest actually paid up to 31st March 2024 was 20,000 and the balance was paid in November 2024. Tell me how much is the bank interest given in the question? 60,000 on the machinery. Okay. And it is paid up to 20,000 is paid out of the 60,000. 20,000 is paid. Remaining 40,000 is paid in November 2024. See here, people, this fellow is Mr. Raju. And the due date for individual is going to be 31st July of 2024. For PY 2024, 2024, 31st July is the due date. This fellow paid in the month of November. So it is not going to be allowed. 40,000, that is 60,000 minus 20,000 which is allowed. Remaining 40,000 shall be disallowed and it will be added back as your income in your PGBP. Now, housing loan principal, that is housing loan principal repaid during the year was 50,000 and it retakes to the residential property acquired by him in PY 22-23 for self-occupation. Interest on housing loan was 23,000. Housing loan was taken from the Canara Bank. These amounts were not dealt with in P&L account given below. Everyone. Housing loan principal repaid during the year was how much? 50,000. And this 50,000 rupees, if the principal loan is repaid under your normal provision, this will be allowed as deduction under section 80C. And it relates to residential property acquired by him for self-occupation. You can also take the interest deduction under your income from house property. Interest on housing loan is 23,000. Housing loan was taken on Canara Bank and this can be considered as your income from house property, self-occupation. No, obviously your GAV will be nil. In case of self-occupation, what will happen, people? In case of GAV, it will be nil. In case of your NAV, it will be nil. In case of 30% of deduction will be nil. Interest on housing loan will be provided, can be taken as deduction over here. Clear? And housing loan interest, housing loan taken from the Canada, these amounts were not dealt in the P&L account given below. So we have to consider this amount separately. Everyone? Clear? These have not been. If they would have considered, we would give the effect in PGBP, then give the effect in income from house property. As this information is not given in PGBP, we are going to give the direct effect in income from house property. Where it has been stated, it has been stated in the question only. Clear? No. Depreciation allowable under this act is computed on the following basis. WDV, opening WDV after considering the depreciation of the preceding financial year, last year depreciation you have considered. Opening WDV you have proper opening W 11,90,000. Addition has been made during the period that is used for a period of more than 180 days, 2 lakh. Total additions has been made 4 lakh. Total addition, sorry. Out of this total addition, 2 lakh rupees is the addition made during the period that is used for a period more than 180 days. If it is used for a period more than 180 days, so then what you're going to consider? Used for a period more than 180 days means you're going to consider full rate of depreciation here. That is 4 lakh minus 2 lakh would be considered as 2 lakh, which will be 50% of the allowable depreciation, people. Plant and machinery is 15%. No, 15% into 50% will be another 2 lakh. So compute the total income of Mr. Raju for AY 24-25, assuming he pays tax under your default tax regime. Clear? Pays tax under your default tax regime. So they're expecting you to do the default tax regime basis. Then remember, under default tax regime, you have no interest allowance. You have no interest deduction allowable for your self-occupied property. Interest deduction is allowed under your let out property for this default tax regime, but it is not allowed under your SOP. So considering the same, net profit is given in the question. See now, if you get back into this point, this has been dealt with, this also has been dealt with, GST paid is also dealt with. All this information, depreciation as per the P&L account, you are going to add back. And the dividend income and the income from agriculture. Basically, dividend income is going to be taxable under that income from other sources. So you will remove from PGP, you will put it under income from other sources. Income decrease, profit decrease. So you are going to subtract that from your PGBP. Income from agriculture, you're going to remove that amount from the PGBP, but it is not going to be taxable under any head because under section 10, subsection 1, it is going to be exempted. So you're going to remove this from the PGPP and add this in your income from other sources. This you're just going to remove it from the PGBP. You're not going to add it into any other sources because it is exempted under section 10 subsection 1. Clear? See, the net profit as per P&L account is given in the question. Payment to relatives, 10,000 rupees. Cash disallowance, there is nothing. There's no cash disallowance because we have already seen the point. 33,000 is allowed. So, this is the point. Salary paid to the staffs not recorded. Again, explain. Bank term loan, 40,000 rupees is added back. SGST penalty. Always remember with regarding to the penalty people, penalty of two types. Penalty for breach of contract, penalty for breach of law. If you're going for the penalty for breach of contract, remember that is going to be allowed. If you're paying any penalty for the breach of law, that is not going to be allowed. Clear? Now, so depreciation as per P&L account will be also added back. Again, income from the domestic company, you're going to remove it from here and you're going to add it to your income from house property. You're going to add it from your income from, you're going to add it from in the under there income from other sources. Income from agriculture, remove it from the PGBP and then it is not going to be added anywhere. Depreciation, you can look into the computation very soon. Depreciation calculation, that is opening WDV information is given. More than 180 days is 2 lakh, less than 188 is 2 lakh. So after doing the total, you have the depreciation. So the total less than 180 days that you are going to provide it for 7.5%. Remaining these two combined, I've just taken the total and taken that 15% and consider the amount total depreciation of 2 lakh 23,500. If you need this notes, whatever you are looking over here, this notes is available with along with the other free resources for the other chapters, direct tax and all the related amendments information. Everything is provided in the Telegram channel. The link will be provided in the description. You can go and watch over there and join over there, and you can get the latest updates and the free resources as well. Now, additional depreciation would not be considered, people, even though this additional depreciation wouldn't be considered, even though this fellow is into manufacturing, because this fellow is opting for default tax regime. Under default tax regime, normal provisions are allowed, normal depreciation is allowed. Default tax provision, additional depreciation would not be allowed. So we are not going to consider the additional depreciation as per 115 BSE, will not consider. Great. See, I told you, income from house property. If it was some other income, if it was other normal provision, you would have got 23,000 whatever, 23,200 whatever you have over here. You would have got this 23,000 as interest deduction. As this is 115 BSc, we don't have. The provision says that you can't take any interest deduction under your income, under interest on self-occupied property under 115 BAC. Clear? Now, there is no deduction which is provided over here and we are considered. Again, there is no deduction which is allowed under section 80C also. No deductions other than section 80CCD2, 80CCH, 80JJAA. Only these three are allowed under 115 BAC. Apart from that, nothing else is allowed. Clear? This is your question number 2. So now, people, let's look into the question number 10. The question number 10 states, Mr. Tenzin is engaged in composite business of growing and currying the coffee in Coorg, Karnataka. The whole of coffee grown in his plantation is curd. Relevant information pertaining to the year is given in the question. Opening balance of car, only asset in the block as on 1/4/2023, 3 lakh is provided. Opening balance of machinery as on 1/4/2023, 15 lakh is provided. Expenses incurred for growing coffee, expenditure for currying the coffee, sale value of the curd coffee. All this information is given in the question. And besides this, besides being used for agricultural operation, the car is also used for personal purpose and disallowance for the car is at the rate of 20%. That is personal use, it is used for 20%, 80% is used for the business. And the expenditure incurred for car running and maintenance are 50,000. And whatever the car related depreciation and expenses, whatever is there, we are going to consider the 80% to be the business related expenditure and 20% to be the expenditure based on that expenditure. 50,000 rupees out of this 80% will be considered as business and remaining 20% will be considered as the Person. The compute the income arising from this point. So always remember when it comes to the composite income, that is a part of income going to be taxable as agricultural income and a part of income going to be taxable as your business income. When it is composite income, always remember it is not the turnover that you're going to apportion and do the calculation. It is the final income which you get after subtracting all the relevant expenses. Whatever the final amount comes, that you're going to uh, equal it. That is, give it as per the proportion, as per the provision mentioned. See, sale value of the coffee curd given in the question is 22 lakh. Now, expenses is already given in the question 3 lakh 10,000 and 3 lakh for that matter. The sale expenditure, the sale value is given in the question. We have considered the expenditure of that expenses for growing coffee. So car expenses is given in the question 50,000 rupees. 80% is your business related expenses. Depreciation on the car as per the income tax would be the depreciation on the car. It's already we have recorded it in a working note. See, opening balance of the car is 3 lakh. You have not paid any purchase, not paid any sales. Closing balance is 3 lakh. On that one, you're going to record 15% of it. And 20 out of this 15%, 20%, whatever the depreciation you got, 20% is relating to personal. Only the remaining amount goes to your expenses of 36,000. Expenses of growing coffee currying operations is going to be 3 lakh. So the total profit from the composite operation is 12 lakh 89,000. The notes which you can see, it's available in the Telegram channel. You can go and join over there. The link is in the description. Business income, out of this total amount, whatever has been considered, 25% is considered as your business income. Remaining 75% is your agricultural income. This is how, always remember, composite income is going to be considered for the purpose of calculation at the final stage. This considered for calculation means apportionment of 25%, 75% you're going to consider over here. Clear? Now, this is your question number. So now, this question, Mr. Sukhvinder is engaged in the business of flying goods carriage. On 1st April 2023, he owns 10 trucks, out of which 6 are heavy goods vehicle and which is weighing 15,000 kg each. On 2nd May 2023, he sold one of the heavy goods vehicle and purchased a light goods vehicle on 6th May 2023. This new vehicle could, however, be put to use only on 15th of June 2023. Compute the total income of Mr. Sukhvinder for AY 24-25, taking note of the following data. That is, freight charges collected given in the question, operational expenses 6,25,000, depreciation as per the section section 32 1,85,000, and net office other office expenses is 15,000. Net profit is given in the question. Other business and non business income 70,000 is given in the question. See, people, this question is very simple. They are asking you to calculate the income of Mr. Sukhvinder. They have given as per the books of accounts. We will consider as per the books of accounts, and also side by side we will do the comparison as per section 44 AE, and we will see whether which income is going higher, and then we are going to make the computation. See here, as per the books maintained, it's already given in the question 4,45,000 plus other income being 70,000. Total is 5,50,000. But as per the presumptive income under section 44 AE, we have given in the question, see here, is engaged in the business on flying goods carriage. On 1st April 2023, he owns 10 trucks. Up to 10 trucks can you own as per 44 AE? Yes. Exactly 10? Absolutely yes. Out of which 6 are heavy goods vehicle, gross vehicle weighing 15,000 kg, and remaining 4 are normal vehicles. On 2nd May, he sold one heavy goods vehicle and purchased a light goods vehicle on 6th May. So can I say, beginning of the year, actually there were 6 heavy goods vehicle and 4 normal goods vehicle. Whenever you are considering the income under section 44 AE, it is going to be 1,000 per ton per month or a part of month for heavy goods vehicle, and for normal vehicles it is going to be 7,500 per month or part of month. That is what we are going to consider. So one goods carriage up till May. You had sold this on 2nd May, but up till May you had part of month would cover, even one day would be covered under the point of part of month. So we are going to consider April, May, one day would be considered as part of month, two entire months. Multiplied by 1000 per ton. How many tons are there? 15 tons are there. Total multiplication would give you 30,000. So five goods carriage held throughout the year, 12, 1000 again. Five goods carriage are held throughout the year, no, entire year it is held. So 12 months multiplied by 1000 per ton, multiplied by number of tons, you have got so much more. And goods vehicle other than heavy goods vehicle would be, other than heavy goods vehicle, light vehicle you had, no, you sold one heavy goods and you bought a light good vehicle. So that is bought on 6th May. As it is bought on 6th May, it is used for even single day would be considered for entire month. So 11 months multiplied 7,500, you got 82,500. Then other remaining four vehicles, they were it was present as usual 7,500, 3,60,000. This is your question number